Hey there, YouTube. So in this video, I wanted to cover the IRS CP2000 matching notice. That's what it's commonly referred to. So these notices go out, they're generally automatic when a taxpayer does something on their return that the IRS basically disagrees with because it contradicts what's in their system. Okay, so I've got just one slide in front of us. What's the notice? What kind of triggers it? And then some examples that we'll go through just to illustrate why this would occur. So most of these reviews, like I said, they do occur automatically when you e-file a return with the IRS. And the notice is triggered because third-party information submitted by your employer, who you have your bank accounts, your brokerage accounts with, that contradicts what you have on your tax return. So if we look at the example here with John, John e-files his return, and he has a Schedule B that's included, right? So Schedule B is used to report your interest and your dividend income, and then you also answer questions about whether you have any foreign financial accounts or any interest in foreign trusts. So John includes Schedule B, which he's required to do, and he has a brokerage account with TD Ameritrade, which earned $100 of interest and $500 of dividend income. So he reported those amounts on the Schedule B as required. However, what John forgot was that he also had some dividend income in a second brokerage account. So he's got a second account with Charles Schwab, and he earned $1,000 in that account. So after John filed his tax return, he received a CP2000 notice in the mail. So the IRS, what it does is it cross-checked the information on his 1040 with the 1099 data submitted by third parties. So TD Ameritrade, Charles Schwab, they sent 1099s that showed how much income was earned on the accounts. So the CP2000 notice basically brings to John's attention, it's like, hey, look, you reported $100 in interest and $500 in dividend, but there was another $1,000 of dividends that you failed to include in your tax return. And so the CP2000 notice lists all the proposed changes, and then it calculates an amount of tax due. In John's case, it was going to be $200. So what does he need to do? Well, the letter's purpose is to highlight the discrepancy, and the IRS already proposes adjustments and taxes owed within the letter. And then it asks you, the taxpayer, to decide whether you agree with the changes or not. And so the IRS will automatically calculate it based upon you agreeing that you didn't report all of your income. And so if John, in this case, agreed with the proposed changes, he doesn't have to file an amended tax return, but he just has to pay the taxes owed. So he would have to pay an extra $200, and then that would resolve the notice. Now, if John disagrees with the proposed changes, he should complete the response form that's within the CP2000 notice, is a couple pages into it, and then return that to the IRS. And that does happen quite often. So the IRS the system sometimes just messes up. It sometimes duplicates information. I've seen that happen to many of my clients where it basically doubled up on the amount of income that it thought was going to be reported. And so we had to reply and say, no, look, your transcript is showing it twice, not once. And that's why this notice was triggered. Very, very common. So very important to carefully read the notice. Make sure you agree with the changes. If not, respond accordingly, and make sure it gets resolved as soon as possible. Now, in many cases, it does make sense to file a 1040X to correctly report that income and expense. And here's an example, right? If John, let's say he forgot to report a 1099 NEC, which is non-employee compensation, because he has a side business, right? So the side business, all the income and expenses report on his Schedule C, and he just forgot to do it. Well, if he gets a CP2000 notice for that reason, he would very likely want to file a 1040X because not only does he need to report the income, but he has to include all the expenses that are related to that income. Because what the IRS will do is they'll report all of the income from the 1099 NEC, compute the amount of tax owed, assuming you have no expenses. So you're going to pay more in tax if you just pay the bill based on the notice rather than file an amended 1040X, report the income, report the expenses, compute a net amount of profit on the business, and then pay tax on that value, right, which is going to be lower. So, so that covers it. High level CP2000 notices. Like I said, most of the time, it's something that can be just paid. If you miss something, just go ahead and pay the bill. But if you disagree with the changes or it's prudent to file an amended 1040, go ahead and do that instead. So I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again soon. Thank you.